What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. But before we get started in talking about our charts and price targets, let's talk about some things that happened last week and some things that are happening this week that may help reverse markets back up, or they may force them to come back even lower. First and foremost, the most important thing that happened last week was the release of the CPI report, which is the inflation rate. Inflation moved up in March to 3.5% as opposed to where we started off the year with 3.1%. Obviously, this is a significant improvement to where we were in June 2022 when inflation peaked at around 9.1%, but the Federal Reserve has been targeting a 2% inflation ever since that they started off their interest rate hike cycle, and so far inflation is still lingering right around 3%. Remember that this entire stock market rally was based on the fact or the idea that the Federal Reserve will be cutting interest rates in the next 12 months. This was back in November of 2023, and unfortunately since then we have not seen a single interest rate cut, and so those hopes of an interest rate cut are starting to diminish, that inflation is starting to move back up in the wrong direction. Now, last week, the Federal Reserve did release their minutes report from their last FOMC meeting, and it stated the same thing that we've been hearing over and over again, that they are willing to cut interest rates this year, but they need more proof that inflation is falling before they do so. Now, apart from inflation, last week we also saw Jamie Dimon, which is the CEO of JP Morgan. He stated that inflation is still one of the biggest threats to our economy, and now he added that geopolitical tensions such as the war in the Middle East and the war between Russia and Ukraine are adding more pressures, and it could hurt company and economic performance over the next quarter. His comments set banks lower. You can see that JP Morgan sold off, closing the week off about 6% lower. And other parts of the market also sold off, and you can see that over on the Market Watch, where you can see that almost every sector on the market was red to end last week, apart from Apple, which was the outlier. Now, with all that being said, coming into this week, of course, tensions are high. Over the weekend, we did see some developments that may hurt markets even lower and send oil even higher. Of course, we saw Iran attack Israel, and Israel is looking to fire back at Iran. We won't get into the politics of things, but these things will definitely impact the market, so that is something to keep in mind as you go into the week ahead. Apart from that, something that will be watched closely this week is going to be the US retail sales data. The consensus is it will come at around 0.3% growth. Last month showed 0.6% growth, so obviously smaller growth, but generally in the right direction. It's still reading at a positive reading. Remember that retail spending is at the forefront of our economy because that's where consumers lie, and how consumers are behaving can tell us a lot about our economic performance and what we can expect in the coming quarter. Last but not least, apart from the US retail sales, this week we'll be diving further into earnings season. We have major bank earnings from Goldman Sachs. On Tuesday, we have United Healthcare and Johnson & Johnson. On Wednesday, we have Abbott Laboratories, and on Thursday, we have Taiwan Semiconductor, Netflix, and Intuitive Surgical. The reason why all these earnings are important is because all these earnings are in massive companies in different sectors of the market. And so the more you pay attention to these earnings, the more that you'll get an idea of how different sectors of the market are doing and how the biggest companies within them are doing. And that can give you opportunities to trade not only for this week, but the entire coming quarter, if you pay attention to what these companies are saying about their guidance and what they're expecting for the quarter ahead. So now that we've talked about everything that's happening on the economic front, let's go ahead and jump into our charts and see what's happening on the macro picture, and then we'll move on to the micro picture. Starting off with the macro picture, we always like to start off with the longer time frame so we get an idea of what's happening on the overall chart. You can see that we are seeing one of the strongest pullbacks we've seen on SPY ever since it started rallying back in November of last year. In fact, SPY is revisiting its 50-day moving average, which is this yellow line on my chart, for the first time since November of 2023. Now, this yellow line is a major support because the 50-day moving average is often used by institutional traders and Wall Street to gauge whether the stock that they're looking at is currently in a bullish trend or in a bearish trend. With that being said, The first thing you need to pay attention to at the start and at the end of every single day on the daily time frame, specifically for SPY, is where did that daily candle open and close in relation to that 50-day moving average. If we break below that 50-day moving average, we may see further lows, and if we do see further lows, here are some supports that you need to pay attention to. First support to pay attention to is going to be the 507.70 support. If we break below that level, we can enter a little bit of dangerous territory, and it can move us towards that 503 level as the next downside price target. Now below 503, we can free fall to fill this gap down towards 497, and below that gap fill we can see 493, which means that below 503 the target is going to be between 493 and 497. Now if buyers manage to move us back up this year and move us back above 515.45, we would enter a healthier zone, and it would move us further away from that 50-day moving average and keep us from that risk of breaking below it. Above 515.45, the first price target is going to be right around 521.90, and above that we have the next price target set right around all-time highs. Remember guys that last week's pullback was severe, however we are still trading right around all-time highs, and we can easily reverse back up with any sign of positive news or a catalyst. We are going into earnings season, and earnings are often one of the biggest movers of markets, and so we may see markets push back up on good earnings depending on companies' performances. Now moving on to the next stock on our watch list, which is going to be Tesla. Tesla continuing to struggle and trading right around its 52-week lows, very much getting closer and closer to breaking towards that 152 mark. On Tesla's daily chart, you can see that it has been battling the 10 and 20-day moving averages for the last 3 to 4 weeks, and it is getting ready to make a big move. Here are some levels to focus on for Tesla in specific. If you are bullish on Tesla, Tesla is currently not trading in your favored position. It is definitely trading in a more bearish position below that 184.25 mark. This is a level that it has been rejected at once, twice, and 3 times, which means that there's what we call a triple top pattern on this chart, and it's going to need to break above that level to earn any kind of confidence back. As long as it's below that level, it is more likely going to come down lower. The first support coming into this week is going to be 167.40, then 160, then 152, and then we enter no man's land. If somehow, some way Tesla moves back above 184.25, we don't see much resistance until around 205, but this is a very aggressive price target, so make sure you guys are checking back in and subscribing to our videos in order to see what the next price targets and levels to focus on next after Tesla makes that move. The next stock on our watch list is going to be Apple. Apple rallied on Thursday and Friday after they released a statement about their artificial intelligence powered MacBooks, and of course that excited markets more than any announcement that Apple has made over the last few months. Apple canceled their EV vehicle, they introduced robotics, and now they are going to be releasing AI included in their next MacBook. Obviously that got markets excited, but we still don't believe this rally too much because it didn't come accompanied with that much relative strength. And so this is a rally that we would take with a grain of salt, as we would say, and we would be very careful on playing it. Here are some levels to focus on for Apple. Of course, if you watched our last video, you know that we have not changed this resistance. 178.70 remains the resistance that Apple needs to break above in order for it to really regain buyer confidence. It closed the week just below that level last week. That means there's a good chance it's going to try it this week, but it doesn't necessarily mean that it will hold. To the downside, we have a support on Apple of 173.70. Below that level, we don't see much support. This was a pretty vertical rally. It didn't have much time to consolidate and create much support. So below 173.70, Apple can easily free fall to retest 167. And if it does break below 167 this time around, it will likely free fall towards 159. To the upside, if Apple breaks above 178.70 and holds, it's not important that it just breaks. It needs to hold above that level. The next upside price target is going to be right around 185. The next stock on our watch list is going to be AMD. Now, AMD has been absolutely struggling compared to the rest of semiconductors. Unfortunately, it has gotten one of the worst ends in between this sell-off, and it is now trading at its 100-day moving average, which is a very good example of what happens when a stock breaks below its 50-day moving average. This is the same 50-day moving average that we were talking about on SPY, which is it's testing right now. AMD broke below that level, and you can see that it has been selling off since. So this gives you an idea of what could happen if SPY breaks below this level. For AMD in specific, the first and last thing you need to pay attention to at the start and end of every single day is where did that daily candle close in relation to that 100-day moving average. Again, you guys, for those of you not familiar with our videos, the moving averages we always like to have on our charts are going to be the 10, 20, 50, 100, and 200-day moving averages. We use them for different reasons, and if you are interested in finding out more, we will leave a course link in our bio that will teach you all about our strategies and how you can utilize all these indicators. But for now, on AMD in specific, that 100-day moving average is going to be acting as a major support coming into this week. If it breaks below that level, here are some levels that you need to pay attention to for AMD. First and foremost, AMD's next support is not until 159.40. If it breaks below that level, then we can see 154 next for the stock. Resistance point to get back above to earn any kind of confidence is going to be right around 168, and then the next resistance is going to be right around 172.80. Keep in mind, you guys, that semiconductors are still one of the most hyped sectors in the market right now, and so a lot of eyes are on them. So we wouldn't be surprised to see AMD rocket back up towards 187 at some point. But TSM, or Taiwan Semiconductor, is reporting earnings this week, and that is likely going to be the biggest catalyst that's going to move semiconductors at all. If AMD moves back above 187.70, the next price target is right around 197. This is an extremely aggressive bullish price target, so make sure you guys check back in so we can update you on these levels if it doesn't happen this week. The next stock on our watch list is going to be NVIDIA. NVIDIA doesn't seem to be too fazed by the market sell-off. You can see that NVIDIA actually rallied back above 900 and closed just below it on Friday. Here are some levels to pay attention to on NVIDIA in specific. Overall, we are still very bullish on NVIDIA. We have been riding NVIDIA with our group ever since around 470. So we are still sitting right around a 100% gain on our shares, and we are still looking for more highs on the stock. We are very bullish as long as it holds 831. Of course, we don't want to see it back around 831 now that it has rallied. We want to see it hold 875 to maintain the strongest bullish position. And the next breakout is going to be right around 909, which is last week's highs. If NVIDIA can break above 909, the next price target is going to be right around 932. And above 932, our next price target would be all-time highs right around 974. The next stock on our watch list is going to be Meta, which is still flirting with its all-time highs and still benefiting from their last earnings. You can see that after the company gapped up on earnings, it continued moving up. This is what we call a power earnings gap up, and this is something that you need to pay attention to this earnings season. If you see your favorite company gap up on good earnings and their numbers are actually strong, something like this can very much happen, and they can continue moving up over the next quarter, which is something that we've seen from Meta. If you are looking at Meta, here are some levels that you need to pay attention to. Of course, the main resistance to watch is going to be its all-time highs right around 530.70. Above that level, it's a blue sky breakout. To the downside, we have a support right around 506.30, and there isn't much support below that level, so it can easily free fall towards that 476 mark. The last and final stock on our watch list is going to be Amazon, which just reached all-time highs despite the overall market sell-off. Amazon still managed to hold very strong, and unlike other stocks on the market, it is still trading above its 10, 20, 50, 100, and 200-day moving averages, which is a healthy sign overall. If you are looking at Amazon's shorter-term time frame, the first resistance you need to pay attention to is going to be right around 189.77, which is its all-time highs. Above that, it is a blue sky breakout. To the downside, Amazon has a support right around 181.90. Buyers need to defend that in order to avoid breaking the trend back down towards 176.60. And below that level, things can get ugly very quickly. It can sell off to these two price targets. So again, thank you guys so much for checking in. We hope you found this video helpful. Don't forget to subscribe and like.